2020. And I'm very pleased to be able to make this presentation today. We released our numbers to the Jamaica Stock Exchange, but in keeping with listening to our investors and customers who've always wanted to understand what the numbers mean, we're facilitating this today. So we go straight into it. So for the quarter, and that quarter would be from July to September 30, we actually returned to profitability and posted a profit of 331 million Jamaican dollars. This basically evidences that we have gotten control of the impact of COVID. You have remembered what happened in the first quarter in terms of the fallout of the stocks. And so we're happy that our cash generation has really picked up and has been able to produce this profit for the quarter. The result is that our shareholders' equity is still pretty strong. We have $13.1 billion in shareholders' equity. That translates to a price per share of approximately $8.29. And notwithstanding the rebound, one of the things that we've seen is that the fall off in the market has slowed significantly. And that's the reason that our comprehensive loss has coming in at 164 million, which is the lowest has been for the three quarters year to date. So then we go into a breakdown of how we were able to achieve this. And whilst relative to the prior period, some of the numbers are lower, prior period meaning the September 2019 quarter, relative to the June quarter, we've seen a nice rebound. And so our net interest income and other revenues came in at $746 million. And that primarily helped to drive the profit of 300. Obviously, because of COVID, we've spent a lot of times looking and trying to pull down our expenses. And you'd have seen that in the comparison. And so, last year, our operating expenses was 458 million. We're able to pull it significantly down this year to 414 million, notwithstanding inflation and growth in the economy of over 6%. So, I have to give thanks to the team that, because of COVID, we had to find innovative and different ways in which to rein in our expenses. We continue to see a rebound in our business. And this graph actually shows the breakout in terms of where we're earning the majority of our business. For the third quarter, you'd have seen where net interest income was the dominant driver of income for the third quarter relative to the investment banking side of the business. A good area that we've been able to have sustainable income has been our foreign exchange trading business, our Cambia business. It has been consistently giving us good revenue, and we expect that to continue as we watch the gradual decline of the Jamaican dollar relative to the US dollar and the volatility that is in the marketplace, where the market devalues the dollar, and then you see the central bank comes in to try and slow it and then ultimately reverse it. We believe going into the fourth quarter, and certainly because of the third quarter, we've seen where we're getting a lot of advisory contracts. And we have booked some of those incomes already, but we expect going into the fourth quarter, that side of the business in terms of the income from advisory is expected to increase significantly. As we look on, we will see here, just to put into the context, the profit that we've made for 2020. So the profit is in excess of the profit for the same quarter in 2018, and it is lower than the third quarter last year. But obviously, we didn't have COVID last year. So all in all, I think it has been a relatively stellar performance, especially, again, from the backdrop of COVID, where, we've gone through two very difficult quarters dealing with COVID and the changes that come about as a result of COVID. So, we've had to take drastic measures. Unfortunately, we have had staff members who we've had to lay off, etc. But we have to protect the golden goose. So as we nurse the company back to profitability, then we can look at expanding significantly. So we believe that we'll be able to continue this performance, certainly for the rest of this year and going into the new year, as we see things start to come back around. ultimately, we run a business based on the book value, and that the total comprehensive income recognizes that. You'd have seen that in 2018, we were able to book $4.3 billion in comprehensive income. And notwithstanding the movement in the stock market in 2019, for the third quarter of 2019, we actually lost over 200 million in comprehensive income. So relative to the 164 million that we've seen in comprehensive loss for this quarter, it's actually an improvement over last quarter. So what we're happy about is that the fall in the market has slowed somewhat, and we expect it to continue to trade somewhat around this level. Looking out, we might have another leg down, but I think that will be the final leg, and then we expect to see the market slowly but surely come back to where it has been in the last year and a half. And the company is positioned to take advantage of that. So again, this is a test of the strength of the business. Notwithstanding a significant fallout in the market, we still have $13 billion in equity. So we've seen where the equity of the business has fallen from approximately $20 billion for the prior period, September 2019, and it's now at $13 billion. So that's almost a $7 billion movement, but we're happy that we have the ability to withstand such a movement and still have significant capital to withstand. And more importantly, we have put the business in a strong cash position, because we believe there will be significant opportunities over the next couple months and certainly the next year to take advantage of. And we believe once we take advantage of those opportunities, we'll be in a very, very good position to put significant value back on the balance sheet. And finally, one of the arbitrages I keep saying to people when you're looking at the Mayberry stock, the dotted line speaks to the Mayberry book value. Mayberry is the only financial services company now that is trading below its book value, and that has been the case for potentially too long. And I think it won't take much more for people to realize that the shareholders' equity of a financial institution is almost like cash. Its assets are almost near cash. So that's one of the main reasons financial services companies don't trade below book. So we think this is a huge opportunity for shareholders out there to take advantage of it, because you will see that the blue line, which is the actual price in the market right now, is significantly below that dotted orange line. And we think that is value that's there for people to take advantage of. So especially after, I think we've seen the worst in the stock market, I believe we're now poised. As the economy recovers, I believe the stock market will recover with it. And ultimately, our companies in the business will recover and show good returns from that perspective. So thank you very much. That's a synopsis of the third quarter. I think at the end of this, after we've heard from Michelle, we can go through questions, and I'm happy to take questions at that point in time. Over to you, Dan.
Thanks, Gary. Appreciate that. Stunning performance, if I say so myself. And again, everybody, if you have questions, especially for those of you out there, please feel free to send in questions. We will have a question and answer session on Mayberry, as well as on yet another stellar company that we're presenting to you this week. So as promised, we've invited yet another special guest. This week, we're going to have Mrs. Michelle Chung, who is the CEO and co-founder of Honeybun Limited. Mrs. Chung has a very interesting background. She's the co-founder of the first bakery in Jamaica with the Hazard Analysis and Critical Control Point HACCP certification, which is an international food safety program. She has over 35 years experience in baking, in the baking industry. And she's the immediate past president of the Jamaica Exporters Association, now merged with the Jamaica Manufacturers and Association, the JMEA. She's ranked by Business Suite as a Businesswoman of the Year and the best CEO. She's also a trained certified HACCP consultant through the BRI International Group in Canada. Michelle has been instrumental in leading Honeybun over the years and has won the Governor General Award for Best Junior Market Company, as well as the JSC Best Practice Award for corporate disclosure and investor relations and corporate governance, amongst other awards. Today, Michelle will be giving you an investor briefing on Honeybun. I welcome Michelle Chung to the Virtual Investor Forum for the first time,
Thank you.
and we look forward to having a discussion with you.
Yes.
Welcome, Michelle.
Thank you. Well, I'm happy to be here. Thanks for inviting me.
Our pleasure. Also online, we have our Chairman, Christopher Berry, as well, and of course, Gary Perrott. Welcome, Mr. Berry.
Thanks, Dan. Welcome, everyone.
Great, excellent. So let me move right into it, jump into our questions. We have a few questions for Michelle, and again, for those of you joining us online, please feel free to send in your questions as well, too. First one for me, Michelle.
Yes.
The opening hours for your outlet stores and various distributors were adjusted because of the ongoing restrictions associated with COVID. How has this affected sales and your business generally?
The outlets have been a good thing for us because we have a lot of customers who go to the outlets to get their regular baked products, and we're opened as early as 7 o'clock in the morning, and we close at 5 on the more uptown outlets in Crossroads and East Street and Princess Street. We have 2 outlets, and they close at 7. So it's been good for customers that they've been able to continue to get those products without any pause in closing time, or and besides obeying the requirements for closing time. So it's been good.
Great, but I would imagine you've had some negative impact generally this year as a result of the COVID restrictions?
Yes, certainly. We've had quite a few sales, fall within certain markets that we service, and we've just had to find innovative ways to be able to provide that service to our customers continually. One of them was we were delivering products that the customers could order online, and that went quite well. And we've had to pump up our social media presence, and all in all, I think it has been good because we've seen continued increase in sales year over year.
Excellent. Speaking of increase in sales, your export sales grew by 40% in 2019.
Yes.
How has this global market impact affected you in terms of your year-to-date performance for your export sales?
Well, at first we thought that it would have impacted it by a lot because, of course, it's a global pandemic. But it was quite surprising to find that with the efforts and the new products that we have, or the products that we've developed for exports, particularly our pocket cakes, our pocket rum cakes, we've seen export continue to grow. So this year, 2020, in spite of COVID, we will once again achieve over 40% increase in exports. So that has been a great thing for us.
That is impressive, really impressive. Additionally, early this year, Honeybun wanted to deepen its share in the resort sector with new products. But based on the impact of COVID-19, how has that been impacted?
Okay, so we all know what happened with the hotels. So there were no tourists to feed. So of course our plans were shaken. But nonetheless, before COVID, we were doing extremely well in the hotel sales. We had quite a few contracts, and we've developed some new products for the hotels. So we expect that once things get back in line, we will continue to meet our targets as set for that particular market.
Excellent. And last one for me before I turn you over to the chairman or Gary in case they have any questions. Having an online presence and taking advantage of technology appears to be a go-to strategy for success. In and outside of the current environment, has Honeybun explored strengthening their presence online and implementing online ordering and that types of systems?
Definitely. We've increased our social media presence tremendously over this period of COVID. And we have found that it has brought tremendous recognition. We've been able to promote a lot more. We've learned a lot of new social media skills. Of course, we've had a lot of meetings online, and it has developed our management team tremendously to be able to just understand that space some more, So we have even people on our trucks who now understand how to use Zoom. We have more meetings, but mostly we've had more social media present on Instagram and Facebook. So that has been a major thing for us. We've also upgraded our website, so we have a new website, and we are looking forward to that being a significant presence for Honeybun in that space.
Very good. Chairman Berry, would you happen to have any questions for Michelle today?
Yes, I do. So, good evening, Michelle.
Hello,
Good to see
Chris.
you.
Good to see you too.
So, people think of food companies as the type of companies that will do well in this type of environment. You spoke earlier about your exports growing. Overall, do you think you'll have another growth year this year?
Are you speaking specifically to export or no?
Overall.
Okay. Yes, we do, because we've already seen growth year over year in spite of the fact that we have no schools. So schools represent a significant part of our markets, and that is almost completely, almost eradicated. We do have a few sales to some of our schools, but having no schools and seeing our sales still increasing year over year, we're so happy to be able to see that. So we have to find new markets to replace that one, as well as when they come back with the increase in sales, we will do extremely well because we would have created new markets in spite of them. But one of the things that I think we did well in the past that we're seeing now is that we were very prepared. We may not have known about COVID, but we always anticipated that there could have been something that would have affected our school sales, because we get affected each summer, of course, when school is out. So we have been developing new products that we're able to push during the out-of-school season, and they have done extremely well for us, particularly our shorty bread. And now we have 2 new products, our burger buns that is doing exceedingly well, hot dog breads. So those are things that people can use at home, and the product quality is outstanding. So we were prepared in spite of not knowing it. Also, to have increased our export, that would also have contributed, and to develop products with longer shelf life and that are exportable has really been rewarding at this time. So it's almost as though we saw it come in and we're preparing for it. So that's what we're happy about.
Well, I like the fact that you have a crystal ball, Michelle, and I'm going to be asking you to do my cash pot picks from here on out. And I just want to say to everybody, this is the kind of company you need in your portfolio. If COVID can keep Honeybun down, nothing can.
Yeah, I think you're right, Chairman. It's COVID, schools, and tourism, and yet they're still
Yes.
going to grow their sales
Yes.
for the year. So that's really impressive. Gary, what do you think? Any thoughts, any questions for Michelle?
Yeah, afternoon, Michelle.
Hello, Gary.
Over the last couple of years, you've spent capital building out a space beside yourself, because the whole issue of the ability to produce and store and consolidate. Now that you've completed it, what are we to expect in terms of cost savings and ultimately how much more throughput the business can generate?
So we completed the build out at the end of 2018, and what we saw as a result of the investment in that expansion and the investment in capital equipment was that we saw our sales in 2019 growing by 16.5% and our profits increasing by 95%, almost doubling. So we were able to improve on a lot of efficiencies as a result of more space and the type of equipment that we invested in. So the fourth quarter for 2019 saw increase in sales 40% year over year. And then we started off 2020 with a 14% year over year for the first quarter, 11% in the second quarter, in spite of the fact that I think COVID started February and March. And then right after that, the third quarter saw a dip in increase year over year, because that was the period when the schools were out and it started to affect us. But we've been seeing now increase year over year for the subsequent months, even in the fourth quarter.
So in terms of capacity,
Yes.
how much capacity are you using of the plant?
We're using about 40% capacity of the
Wow.
plant. Yes. So we do have a
So
lot of plans, and we have,
you have significantly more room
yes,
to grow the business and the profits of the company.
that's correct. And we've also invested in another property near to the one that we have. So that we're hoping to use for a different kind of business. So we're still discussing the use of that building. But it's near enough to Honeybun so that if we needed to expand Honeybun even more, it would be available. But we also have plans for that building, and we'll share that with you at another time.
Excellent. Excellent. So I can see you guys are growing the business, growing the profitability, but we see you doing a few other things too. You started a Honeybun Foundation. Can you tell me a little bit about that and why you started it?
Yes. So in 2018, we actually updated our mission statement, and it's easy to remember. It's 3 words: lead, achieve, and serve. So we lead through innovation, and we spoke about that in terms of us preparing for the future. We will achieve profitability for our stakeholders, because that's very important for us to make our shareholders satisfied. But the one that we're speaking about now, and this was very important to me coming out of the JEA as president, is to serve as well. So when I discovered that this was something I was very passionate about, there were a lot of plans I had for small businesses, Honeybun having been a small business, that I needed to really focus on servicing more, serving the community small businesses. So the foundation was founded and launched last year in 2019, and our mission is to develop powerful business models for SMEs in the creative sector, for them to become exponentially, to provide exponentially for the Jamaican economy. So that was 2019. And of course, COVID hit us the early 2020, and in spite of all of it, we've had tremendous progress with the foundation. So I still consider us a medium-sized business, although we're now a public company. We've had so much success growing the business that we just want to be able to share it and grow other businesses in the Jamaican economy so that Jamaica in itself can grow. But the important thing is that our value proposition as serving the SMEs is not about helping them one-one. It's about developing models for business models that SMEs across the country can benefit. So one of the first ones that we did was we put the training within the environment on one platform, so small businesses can access them online on the platform. So they go to the honeybunfoundation.com and they can see what training is coming up, they can plan, and that's one of 4 business models that we've developed. So you'll be hearing more about the other models. We have a second one launching next month and a third one about to be birthed as well. So we're very excited about what the foundation is achieving, very focused.
Excellent. Who are the main beneficiaries, and has the pandemic altered the foundation's mandate in any way?
Well, as I said, the main beneficiaries are small and medium-sized enterprises. And the pandemic actually accelerated the vision for the foundation, because after collating all the training that existed in the environment, we had wanted those training to be digital so that we could offer it from Montego to St. Thomas. And of course, with COVID, we had to force that through because businesses were offering face-to-face training. So immediately they converted in the pandemic to be online Zoom training. And that actually accelerated, because after we saw this sort of webinars that companies were looking at online, there were so many of them, we decided that, something, people are learning, but they're not executing. They say, oh, that was such a good training. So what the foundation actually did was we developed our first curriculum program called the Create Your Own Strategic Roadmap. So we had 12 significant business courses by 12 amazing trainers They were just handpicked for the foundation. They delivered their training, and the trainees, 18 of them, developed a strategic roadmap. So after each course, they were to document what their action plan would be on a project plan. So they were learning project management. And I'm so pleased to say that out of the 18 of them, 14 were successful, although we had a 96% attendance rate for like 3 to 6 hours a week. And they have now been coupled with advisors to help them through executing their strategic roadmap. So we consider that a tremendous win for the foundation.
Excellent. Excellent. Very impressive. And again, for those of you out there watching us on social media, YouTube, IG, please remember that you can feel free to send in questions. Chairman or Gary, do you guys have any further questions for Michelle?
I have one. So, Michelle, Honeybun is known for its innovation. Can we look forward to more new stuff next year?
Yes, for sure. We have a new product coming out that you're going to love, Chris.
For Christmas?
Yes, for Christmas. And of course, I'd remind you about our Christmas cakes, which are outstanding for Christmas. But we also have something else for you.
Wonderful.
I can't wait. As you know, Honeybun was listed in 2011, if my memory serves me right. So you guys are one of the first ones out on the junior stock market. It was listed by, of course, Mayberry Investments, and we are obviously a top 10 shareholder in Honeybun. And not all bakeries are created equally, by the way, especially when it comes to investing in the stock market. What are some of the opportunities the company has chosen to capitalize on during this environment? And have you been able to create any alternate sources of income?
Yes, I wouldn't say that we have extended ourselves outside of the baking industry. We've mostly been creative in terms of product development, something that we were constantly working on and having success with those products that we launch. We have been looking at a few SMEs for investment as well, and we've developed relationships with them. So, you know, the return on those investments would not have been significant at the time, but we're looking at further relationships with other types of businesses and going into new businesses of our own, which is what I shared with you. Yes. We want to be able to do some other types of business within the next 12 months anyway, or 18 months.
Very good. And if my memory serves me well, we had an 11% increase in your operational expenses for the 9-month period ending. What drove that increase in expenses?
Okay, so those expenses would have been increased also as a result of sales increase of 14.5% increase in sales, although they're not directly related to sales, they are impacted also by sales. But two of the things that caused that increase too was the sanitation requirements for the COVID pandemic. So that would have been one of them. The other thing is that we did a lot of transportation of staff. So when COVID started, we actually engaged transportation, picking up our, I would say, like maybe 200 staff at pickup points so that they were not with other persons. So that would have been it. And we had also started off increasing our marketing spend. So with marketing, sanitation, transportation significantly increased, that would have contributed to that 11% increase.
Very good. Thanks for that. Thanks for that.
So, Matt?
Yes, Gary?
Yeah, I have another question for Michelle. So when I analyze Honeybun's numbers, when you move away from, for want of a better word, capital investment, so when you are building additional factory space, you've indicated you've now invested in other real estate, the company has the ability to generate significant amounts of cash. If you can't find opportunities within your space, is the company giving thought to increasing its dividend, the dividends it pays on an annual basis?
Okay, so I would like that very much. I would like that very much, Gary. I think we're going to prioritize what our future plans are so that we can determine that, and that will be something that will come up for discussion.
Great. So, Chairman Gary, you know, around about this time each week, we tend to ask for a top pick. I don't know who wants to go first. I sense perhaps I'm going to let the chairman go first. Chairman's privileges. What's your top pick for this week, Chairman?
That's easy. A stock for all times. A stock that will make you feel sweet and satisfied. Will grow with you. Honey bun.
Okay.
I certainly have to endorse that because if they've been growing by 14% despite COVID, despite the tourism sector, I mean, that's impressive. The export side of the business, very impressive. So I endorse that. Gary, what about you? What's your top pick for this week? And you can't say honey bun. Chairman already said that one.
Well, I mean, it's sweet enough to serve more than one person. But this week, my stock would be Supreme Ventures. And again, full disclosure, Mayberry holds a position in that, and I chair the business. But the numbers that they've put out this quarter for the last quarter shows that they're very resilient, notwithstanding still a couple of the business lines being impacted by COVID. But the team there is really putting stuff together, and that's my pick for this week.
And you're making that recommendation in what capacity, Mr. Parrott? As CEO of Mayberry?
Well, I'm making
chairman
a
of
recommendation
SVL?
as CEO of Mayberry.
Excellent.
But which is why I made the other disclosures. And at the end of the day, we're a creature of number, Dan, and numbers don't lie. And so they're up on over 20% over the prior quarter. So that's significant performance and growth.
I totally agree with that. Well, if there are no further questions from either Gary or Chairman, all that's left for me to do is thank you, our viewers, for being a part of this month's virtual investor forum. I'd like to also thank Michelle for being with us today and for making that presentation that you did, that lovely presentation on Honey Bun. You guys go out there and buy the products, but more importantly, buy the stock. We're definitely looking forward to yet another investor forum next week, where I think we'll be talking a little bit about MJE Limited as well too. So stay tuned to that. Another great one. For you guys out there on social media, IG, YouTube, thanks so much for tuning in. Don't forget to subscribe to the YouTube channel for Mayberry Investments Limited. Thank you to all our viewers for tuning in today. Keep safe. And remember, Gary, what should they remember?
Slow and steady wins the race.
Absolutely. Thanks, everybody, for joining us. Goodbye.
Thank you.